This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call. You're watching us live from the Motilal Oswal studio right here in Mumbai. I'm Sonia Shenoy and joining me is Nigel D'Souza and Prashant Nair. Nigel, good morning.
Well, morning. Yesterday we thought it was the day, right? We're going to go ahead and break out. Didn't really happen, so I think we're back in the range.
Oh, we're back in the range, and what a range it's been, right? I mean, it's kind of frustrating for investors, for traders, but we haven't moved out of that range for a bit. So here's how the setup is looking like this morning. The Nifty has been very range-bound between that 19,200 mark to about 19,500 or so. Now, yesterday, although the markets, the implied opening this morning is also indicating that the start will be in the green, and yesterday was not a bad session. We ended about 40 points higher. But give and take everything, this has become a sell-on rally market. So if you just map what's happened in the last 1 month, the Nifty is down about 450 points in the last 1 month. The Bank Nifty has fallen quite a bit as well, about 2.5% lower. So in that context, this has become a sell-on rally market. If you look at the chart as well, you'll notice that it's higher tops and higher bottoms for the market in the last 1 month. So keeping that in mind, there is a little bit of caution on board. Having said that, of course, the resistance for the market on the upside kicks in at that 50 DMA, which is about 19,375. So we are heading towards the resistance zone. Let's see if today's good cues can help us, take the markets above that level. The US markets were not too bad, actually. They ended in the green. The Dow was up. The DII buying was solid as well, about 1,264 crores in the cash markets, while FI sold about 1,400 crores or so. But a couple of key data points that you need to watch out for. Now, on the global end, you have the home prices, the consumer confidence, and the job opening data that comes out later today. That's in the US market, so we'll track that very closely. But back home in India as well, you have the Q1 GDP data that comes out on Thursday. You have the August series expiry, and then you have the auto sales on Friday. So it's going to be a data-heavy next couple of days for the market. But Prashant is also joining in. Prashant, morning. This market has just been stuck in that range, and there's nothing to really suggest that we're going to move out of it anytime soon.
I mean, let's see, right? But I just want to start by wishing you
happy
guys
Onam.
a happy Onam.
Oh, yes.
Onam, and
Happy
I want
Onam
to wish
to you
all
as
of our
well.
viewers a very happy Onam as well. So, as they say in Malayalam, Ona Shamsagal, which means, wishing you
I think
happy
in
Onam.
Malayalam, I only know one thing. Nyan ninne ishtamanana. That's I like you, I love you, or something.
Nigel, you know all the operative parts. Huh?
Been there, done
All the
that.
keywords. So what's the Onam celebrations looking like? I mean, anything that, we can partake in?
I'll get you guys payasam tomorrow, which is kheer, So, yeah, that's...
That's enough, actually. We both have sweet tooths.
All right. Well, let's quickly run you through a couple of things before we go any further. So we sort of closed higher yesterday. And, this is something we put out yesterday in the morning as well, that after Friday's Wall Street session and no fireworks from Jackson Hole, etc., which was neutralish, perhaps after almost a week of saying that it's time to stay away, don't kind of try and do too much, maybe it made sense to go in on dips. Well, yesterday we got a rally, but the point is, and we closed higher, 40 points or whatever, but it was a weak close. It was not a strong close. We saw what is called a doji, which basically means that the open and close were almost similar. 50 points off the day's high, 50 points off the day's low. So 19,250 was the low, 19,366 was the high, and we closed exactly in the middle. And that's the reason why I'm saying it was a doji, not a strong close. Overnight cues are much better, right? So NASDAQ is up about 1%. 10-year is, the yield has gone down 3 basis points. Dollar index is well behaved. It's down about 0.25%, just from above 104. It's now under 104. These are the two things which were flashing red. Even on Friday, they were not coming off, even as equities were rallying. They have come off a little bit this morning. Anyway, Sonia mentioned lots of data, right? Jolts on today, core PCE on Thursday, and then payrolls on Friday. So that's basically the data which we will continue to get. Market pricing of what the Fed will or will not do has not really moved that much, even after Jackson Hole. As I said, there was enough dovish things, there were enough hawkish things said, so it kind of cancelled each other out. Not very much to take away. But this data perhaps can move that, so we'll keep an eye. Coming back to levels, a first job for the Nifty is to close above the doji high, which is yesterday's high. So, which is 19,367. That's the first one. We are at 19,300 as of right now. And then after that, you get to the 20-day moving average, which is 19,472. That is some distance away, about 170 points away from where we are right now. On the way down, I mean, the low was broken. I mean, the prior week's low was broken, and the new low, which was made, was 19,230. So if this setup is to work, which is repair, slightly more constructive kind of market going ahead, the low of 19,230 should not go. Again, that is close by, right? 70 points away from where we are. Perhaps, I mean, if you closer to it, that becomes, the risk reward becomes much more attractive to try and go long in this market. The Bank Nifty is stronger, and that has been true for a week now, right? It's been stronger as compared to the Nifty. So Bank Nifty closed near its averages yesterday. The 20-day, for example, is at 44,526, and week left off at 44,500. So you're practically at the 20-day moving average. So that's the first level to take out for the Nifty Bank. And then after that, it is the 61.8% retracement of the fall from the 21st of, I think it was the 21st of July to the 16th of August, which was the low. So that number for the Bank Nifty, the 61.8% retracement, is 45,312, which is the next level after closing about the 20. I mean, you'll basically target that. And I mean, again, here, if you get levels closer to 43,984, those are levels around which you perhaps try to go a little long. But I would say, it's too early to conclude that maybe things are looking definitely more constructive. But with Jackson Hole, etc., behind us, some time spent in consolidation, I think the next couple of days will tell us what the market wants to do. But if you are trading, I mean, best to buy when you get dips, etc., and try and trade that instead of sort of chasing gap ups, etc. I mean, we don't have a big gap up. 26 odd points is all we have at this point in time. Najal, what's the FNO data telling us?
Well, the FNO data is suggesting that, in fact, the tug of war continues. Right, it appears the bears have a little bit of an upper hand because we're closer to their end, right? Yeah. Closer to around the 19,200 odd. So we're back in that 400-point range, odd. But today it's going to be, the Q is going to be from the Nifty Financial Services Index, because that plays out the weekly expiry. Remember, we have the monthly expiry for the indices that will take place on Thursday. But since today's a Tuesday, the Nifty Financial Services Index, that's the one you need to track. Now, what happened yesterday from the FIs? Well, they added more longs than shorts. They added close to 2 longs for every short position. 15,000 contracts is what they added, though they continue to remain net short on the index. Now, on the writing side, what is heartening yesterday is they wrote puts. In expiry week, when there are 2 lakh puts that are written, well, you like that. More puts written than calls telling you maybe the bulls believe there is some sort of a base in the near term. And what were they writing? Well, the Nifty data should come up for you. 19,300 put, well, that was fairly active in trade yesterday. It added close to around 50 lakh shares. The premium out there was close to around 60 rupees. Just plugging in those numbers, and in the month of August itself, around 6 to 7 times we have gone to that vicinity of around 19,200 to around that 19,300 odd mark, and we have bounced off that. Support zone, though, comes in at around 19,200, 19,250. On the upside, we're looking at around 19,387. That's a bit of a resistance zone. So once we get past that, then you're hoping that the Nifty can break out on the upside. But otherwise, that's the range you're looking at. Since it's the Nifty Financial Services Index expiry, well, a couple of strikes should come up for you. 19,700 put, well, that was fairly active in trade yesterday. But on the upside, the 19,750 call as well added close to around 25 lakh shares, which brings us to the level. Since the 19,700 put was quite active, 30 rupees premium out there, you have support at around 19,670. While on the upside, the 19,800 call has the highest open interest. And the premium out there is around 20 rupees. So you add the 20 to 19,800, and that's giving you a bit of a zone out there for the Nifty Financial Services Index. The GIFT Nifty is suggesting a start in the green, but I think buying the dips and squaring off your position in today, that's going to work. Remember, the Nifty, the fresh breakout level will be 19,387. So I'll watch that closely while the tug of war does continue.
Okay, well, a couple of things to watch, right? I mean, if you look at what's happened this month, and we're at the fag end of the month, a lot of heavyweights have dragged this market lower. So whether it's ITC, which is down 5%, SBI is down about 8%, L&T, of course, has done much better than its peers. But a lot of, just look at it month to date. SBI 8% lower, Britannia down 6%, ITC under pressure, HDFC Bank, of course, has been a laggard. So this is a market where we've seen heavyweights dragged this market lower in the last 1 month or so. But before we start, let me tell you what's lined up in the first half hour of the show today. We'll get you updates from the market across the globe. Rajat Bhattacharya of Standard Chartered will be joining in to discuss the global trade setup. Our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At 8:30, we'll do a fundamental stock analysis with Pramod Amte of InCred Capital. All right, so let's begin with some market commentary. Sanjeev Prasad of Kotak Institutional Equities sees low potential returns for the markets over the next 2 to 3 years based on a bottom-up assessment of sectors on their 3x3 matrix of earnings and multiples. According to Kotak, most sectors fall in the growing earnings derating in multiples sell. Sanjeev adds that the current economic and market conditions are not very different from 5 years ago, and the Nifty 50 index has gone up 67% in the past 5 years.
All right, so some money market views now. This is Abhishek Goenka of IFA Global, who says that US Fed Chair Jerome Powell's speech at the Jackson Hole was hawkish but along expected lines. Market is pricing at most one more hike by the Fed from here. China's growth concerns have kept Brent crude prices capped. In a nutshell, stable US rates, a stable yuan and stable crude prices have caused the rupee to recover. He expects the rupee to remain stable and trade between 82.4 to 83.7 to the dollar over the medium run.
And on the bonds, Ajay Magnolia of JM Financial says elevated US yields and a hawkish Fed are keeping the bond market volatile, and a mirror impact can be seen on the Indian bond market. Q1 GDP data due this week. The liquidity seems to be under control with crude prices being stable, and this bodes well for the market. With no major data released today, he expects the 10-year benchmark bond yield to trade in a range of 7.15 to 7.20%.
Well, there's a lot of stock-specific action to track for you. We get to that in just a bit in our special top 10 segment. But we're looking at Pivotal Enterprises, Zomato, Star Health, Gokuldas Exports, SJVN, NPC say they're all stocks on the back of positive news flow. While on the flip side, APL Apollo Tubes, PG Electroplast, RCF and NFL, they are stocks that are likely to open up in the red.
All right, Rajat Bhattacharya is with us. He's Senior Investment Strategist at Standard Chartered. Rajat, good to have you with us here. Thank you very much for your time. So, the Jackson Hole has come and gone, and markets in the US at least are up since then, 2% or so since that event. Is it looking a little clearer, or is it still hazy in terms of what happens next from here? Implications for equities.
Yeah, morning, Prashant. I think Jackson Hole, as you said, was mildly hawkish, if I may put it that way, neutral to hawkish. Now, both Powell and Lagarde from ECB were data-driven, right? So they've clearly said that they're ready to raise rates. They're still focused on inflation, but a lot depends on the data going forward. And that's, in terms of data, there are two things that we need to watch. In the US, how the job market behaves, and in Europe, how the inflation behaves. So this week is a crucial week, as you pointed out. In the US, we have the job openings coming up tonight, and then you have the non-farm payrolls. Now, in terms of the job openings, that's going to be critical indicator for what the non-farm payrolls data comes out. I'm looking at the hiring rate. The hiring rate has been falling, and if that continues, it points to a fourth month of probably below expected non-farm payrolls. As we know, non-farm payrolls have been missing the expectations for the last 3 months. So if that continues, that miss of job payrolls continues, we could see the Fed pausing in September. And in Europe, I'm watching the CPI data coming up. Inflation is clearly higher there than in the US, and we need to watch, whether that downtrend. We are seeing a downtrend in headline CPI, but not so much in core CPI. We need to see core CPI fall. If core CPI remains elevated, we could see another ECB rate hike. But we are getting almost close to the end of rate hikes in both US and Europe.
Okay, we're getting close to the end of rate hikes in US and Europe. That's actually very good for equity markets, right? Because, I mean, we've already seen a good amount of rally. The Indian markets, for example, the Nifty is up 7% this year, but the mid-cap index is up almost 25%. So there is a broad-based rally that's playing out in the Indian markets. Do you think that's something that can continue, and would you dip your fingers further here?
Yeah, in India, the story is slightly different. In the US, like I mentioned, in US and Europe, the narrative is between higher for longer rates and that recession story that never goes away. In India, growth is actually picking up. So we see a further pickup in growth in this current fiscal year. In fact, the latest quarters are going to show pickup from the last quarter, and corporate profits are strong. I mean, the only question in India is, of course, this valuation, and as we know, valuation has also come off a bit. So, in terms of positioning for India, I think we've mentioned it before. It's a structural story, and if growth is supportive, if underlying economic growth is supportive, and corporate earnings growth is supportive, India is going to stand out in terms of the global environment. I must mention also that we've seen FI pick up in India, right? And they're realizing this structural growth story. So if you see just I look at, let's say, MSCI ACWI index in the world, and India's share in that MSCI equity index is just 1.6%, right? It's a tiny fraction, but India's GDP in global terms, in global GDP terms, is almost 3.5–4%. So India is underinvested in global portfolios. That's another factor that is driving India.
All right. Hi, Rajat. Good morning. Rajat, what about the Chinese markets? They are making steps. They're trying to make some moves to rekindle or, try to push back the interest in their capital markets. Also, China's trading at half the valuations of India, maybe for a reason. But in the near term, do you see some money flowing towards China?
Yeah, so China is, challenged in terms of the economic trajectory now, right? So they're trying their best, but it seems like the market is not convinced that monetary policy easing that has happened so far, they've done a few rate cuts, is not good enough. So the market is looking for fiscal policy, fiscal stimulus. But it looks like Chinese authorities are not willing to go the whole hog this year, because they're going to meet their growth targets, the 5% growth target for this year. And that's because of this base effects playing, right? China is coming out of that lockdown this year. So they are going to meet the 5% target, and authorities are not willing to go the whole hog to do that fiscal stimulus that the market is expecting. So it's a bit challenged there. But to your point, valuations are in China are almost half of that of India or half of that of the US. So if you are a long-term, if you're looking at the 1 year horizon or 2 years horizon, you probably will not go too wrong investing there. But there are challenges coming through because of this economic the story that is needs more and more fiscal stimulus.
Okay, we leave it at that. Thanks for your quick take on the market. Rajat, appreciate your time here. Let's slip into a quick break. On the other side, we'll have our entire team joining in to help you prep for the day. Our list of top 10 stocks coming up. Welcome back to Bazaar Morning Call. Hope you're all having a good morning so far. And to everyone celebrating, happy Onam once again from the team at CNBC-TV18. The gift nifty is implying, the implied openings suggesting that the start will be in the green. And a lot of Asian markets are also trending in the green. So it looks like it's going to be a positive start. Our team is standing by to help you with the list of top 10 stocks for the day. Piramal Enterprises is the first one on our radar. Abhishek is here to give us the lowdown on that. Abhishek, good morning.
Good morning, Sonia. So, Piramal Enterprise did hold an investor day yesterday. So, the key takeaways over there is the long-term growth and profitability targets have been unveiled. So, retail lending, a high-touch come high-tech model envisaged by the company. Now, wholesale 2.0, a lower share but higher profitability is what they are saying. So, Piramal is targeting a 15% AUM CAGR over FY23 to 28. Piramal also manages about $1 billion in alternative assets such as private credit and private equity funds. Our company has delivered healthy IRR in some of these funds. So Piramal's life insurance subsidiary has now become the second fastest growing insurer of a low base. Management expects a 50% CAGR in APE, that is annualized premium equivalent, over the next 5 years. Management highlighted its focus on building a diversified retail NBFC targeting the underserved customers by leveraging a mix of high-touch and high-tech business model. So in terms of ROA, they have given a projection of less than 1.5% between FY23 to 25. However, 3.5% is the ROA that they are targeting by FY28. Back to you.
Okay, all right, Abhishek. Thanks a lot for that. Well, I'm tracking APL Apollo Tubes. My colleague Sudarshan has picked up this information, and source-based information indicates that the promoter selling will continue. And this time around, it's on APL Apollo Tubes. So they're looking to sell close to around 0.85% equity. That's around 26 lakh shares. The total value, if this goes through, will be at close to around 420 crore rupees. The floor price for the deals have been fixed at around 1,595 rupees. That's around a 4% discount to the last traded price. And, the 420 crores, it includes the green shoe option as well. So expect the stock to open up in the red. Though yesterday, if you look at the intraday chart, the stock ended at the low point of the day. The sheet was sniffing that there could be some kind of a deal in the works. Only yesterday's chart should come up for you on the screen. Promoter entity held little above 30%. So post this deal will fall a little below that 30% mark.
Okay, thanks a lot for that. Well, let's head across to Vivek. He's going to talk about PG Electroplast, Zomato, Star Health. So he has his plate full this morning. Vivek, hi, good morning.
Well, good morning. It's either block deals or QIP issues that are coming, a lot of supply as far as, the entire market is concerned. PG Electroplast is the first stock on our radar. The company has gone ahead and launched a QIP. Now, the company is looking to raise close to 500 crores via the QIP route, and the floor price is set at 1,641. We did access the term sheet, and, as per the term sheet, we understand that the proceeds will be utilized for funding working capital requirements of both the company as well as one of its subsidiaries known as PG Technoplast. The indicative issue price is at 1,560 rupees a share, which indicates almost a 13% discount, which is why we are going with the red on this particular stock. The implied dilution is almost 14% of the current equity base. The other stock on our radar is Zomato. Tigo Global, via its fund, Internet Fund, has completely exited the remainder 1.4% stake in the company. Along with that, another fund known as Apolita Asia yesterday sold close to 3.19 crore shares, but there was quite a few good names in the buying list as well. Society General, Morgan Stanley, Axis Mutual Fund, Goldman Sachs were some of the top buyers. And Star Health, yesterday we did see a large block deal over there as well. Mio 4-star, sold almost 0.5% out of the 2.7% stake that they held in the company. University of Notre Dame, sold 2.86% out of the total 3.17% stake that they held in the company. Amongst the buyers, some good names. Fidelity Investment Trust bought almost 2.13% over there.
All right. Thanks very much, Vivek, for that. So those are three names to keep an eye out on. Now let's talk about Gokuldas Exports, which will be in focus. They've made a meaty, meaningful acquisition. Surabhi is here to tell us more. Surabhi.
Thanks so much for that. So that's right. So they've entered into an agreement to acquire a Traco Group for $55 million. Now, this acquisition is going to be funded through debt and internal accruals, and it's expected to be completed by Q3 of this fiscal itself. Now, Traco operates, it's a apparel manufacturing company, and it operates in Kenya and Ethiopia. It has a capacity of 40 million garments annually. Now, with this acquisition, Gokaldas doubles its manufacturing capabilities. Atraco's calendar year 2022 revenues were a little over $100 million with a PAT of $7.2 million, which values it at close to 7 times PE. The management said that this acquisition is strategically relevant. It possesses a complementary customer base and operationally a strong company. This acquisition will also gain access to low-cost duty-free locations for their manufacturing. So we'll have to see how Atraco's balance sheet looks like and what customers do they add to Gokaldas' portfolio.
Okay, all right. Thanks a lot for that. Surbhi, your stock is up close to around 15%. Though this acquisition looks very, very good, we'll try to get you further clarity on this particular deal later on the show. But let's go back to Vivek. Vivek, you're tracking some order wins?
Well, absolutely. Two stocks on our radar, one from the power space, one from the infra space. SJVN is the stock that we are tracking. The company's renewable energy arm has got the letter from award from Assam Power Development Company. This is for 3 solar power projects for a cumulative capacity of 320 megawatt. The tentative cost of the development of this particular project is close to 1900 crore. NBCC, watch out for this particular stock as well. The company has received a work order of over 66 crore, and this is from the Indian Medical Association. The project will be executed over the next 30 months.
Okay, thanks a lot for that. Well, Sonal is going to talk about RCF and NFL. Sonal, over to you.
Thank you so much for that. Well, there is a money control report which is suggesting that the offer for sale for Rashtra Chemicals and National Fertilizers, that has been put on hold. This is a report which we have not independently confirmed, but it says that officials have spoken to money control and they say there is no interest from investors right now, and transaction advisors have conveyed this to the government as well, that because of lack of interest, this should be taken back. Now, the Finance Ministry has been trying to shed 10% stake in RCF and 20% stake in National Fertilizers for a while, and the 2 stakes together are worth approximately 1,200 crore rupees. So these 2 stocks will be in focus on the back of that.
Okay, all right. Sonal, thanks a lot for that, and hope you had a good birthday yesterday. Well, let's do a quick recap then of all the top stocks we just discussed. Stocks with positive news flow include Piramal Enterprises, Zomato, Star Health, Gokaldas Exports, SJB and NBCC. While stocks with negative news flow include APL Apollo Tubes, PG Electroplast, RCF, as well as NFL. Let's focus on a couple of more stocks. Manglam has been reading up early this morning a lot of brokerage notes, and he's here to run us through a few of them. Manglam, morning.
Good morning. So 3 brokerage notes stand out this morning. The first one, of course, is on Manappuram Finance, where Morgan Stanley has an overweight rating target of 183 rupees. They're saying that the court quashing the ED case against the promoter means a significant overhang being, removed. The stock is trading at a 1-year forward price to book of 1 time. So, given the prospects that they have, and after this significant overhang removal, there could be a case for an upside on Manappuram Finance. HSBC has written on UPL. They have a buy rating and a target of 775. They say that there is possible recovery in the 3rd quarter given visible signs of reducing inventories and stabilizing prices, and Latin America will be the key for them going forward, and their stress test does suggest that balance sheets remain protected despite some of the headwinds. The only downward risk is if they go ahead and make any unfavorable acquisition. Apart from that, and the final call is coming in from UBS. This is on PVR Inox. They have a buy rating, target price of 2150 odd rupees. The stock price closer to 1730. The reason why they do that is they've raised their 2nd quarter estimates on better than expected performance of recent movies, and they say that the content pipeline at the theaters remain healthy until mid-October as well.
Okay, thanks a lot for that. That's PVR Inox. Been a strong mover there.
By the way, Sonia, for all this scorn from you and Oppenheimer, it's collected almost $1 billion. Just putting it out there.
There's an audience for Oppenheimer and there's an audience for Barbie, right?
No. It's not about Oppenheimer versus Barbie. I've seen
on its own.
On its own. I've seen it twice, and I thought I'll go for the 3rd time. But after discouragement from you, I can't.
I went with Sonia. I didn't watch it.
But twice is enough. I don't think you need to watch a movie 3 times.
Well, we'll see.
Suddenly talking about Rocky or Rani and what Gadar has done.
Yeah,
amazing.
Oh, that's fabulous.
Picked up the hand pump and
just smacked it all over the screens.
Oh, he did. He picks up the hand pump.
That was the scene. That was the iconic.
I thought he stops and then looks back or something. Anuj told me that he went to see it.
No spoilers on this.
He picks it up, he holds it, and everyone who looks at him just runs away.
So what Oppenheimer, what Barbie, right? Gadar is always the one that's done it all. All right, thanks a lot, Mangalam, for giving us all of those brokerage notes and takeaways. Let's move on and talk to Manisha Gupta. She's joining in for a roundup of all the action from the commodity markets overnight. Manisha, good morning.
Morning. Thank you for that, Sonia. Well, I'm looking at some strength continuing in case of the metals as a sector. With China doing what it is, there is support coming into the market. We seem to have created a near-term bottom here. So whether it's copper, zinc, aluminum, steel for that matter, even coal, which gained up 6% overnight. So many of these industrial commodities seem to be doing quite well. What is not doing so great is the crude oil prices after 2 weeks of decline. This week as well has started slightly on a weaker note. Investors are shying away from big bets ahead of the U.S. and China key economic data. You have the U.S. consumer confidence numbers coming in today and the China PMI that comes in on Thursday. The one thing that's keeping the crude oil prices also in favor is the tropical storm Idalia. That is seen potentially disrupting the U.S. supplies in Gulf of Mexico. Remember, 1/6 of crude oil in U.S. comes in from Gulf of Mexico, and the storm Idalia could turn into a hurricane and make a landing by Thursday. So ahead of that, some support could continue in these prices.
All right, Manisha, thank you very much for that. So that is commodities and oil very much in focus. We'll take a quick commercial break here. We have Pramod Amte of InCred Capital joining in to talk about fundamental stocks and sectors that they're betting on. So that's an interesting conversation lined up. Also, we will connect with Harshvardhan Dole of IIFL to talk about the key announcements from the Reliance Industries AGM, which happened yesterday. Stay tuned.
Welcome back. Hope you're having a good morning. Well, the gift nifty suggesting some green to kickstart trade. So a mild green open, 35 points. So maybe we'll be starting closer to around yesterday's high point. Pramod Amte, Head of Institutional Equity Research at InCred Capital, joins us on the show. Hi, Pramod. Good morning. Thanks so much for joining in. Well, it's a stock-specific market, so let's talk about that itself. What's the top idea you'll have as of now from the broader markets?
Basically, in terms of we are positive on the broader Nifty outlook, and the topics for us are in the large cap. We have HDFC Bank, followed by Maruti and Reliance and Ultratech. And in the mid-cap space, we prefer Bharat Forge, BEL, KE, and Globus. And in terms of investment themes, we continue to remain positive on infra and the home building as a sectors to be on the overweight sectors.
Interesting. You've given us already a bunch of stocks. So thanks a lot for that. But Pramod, I wanted to start with Bharat Forge. You said you like that stock. It's had a really strong run, right? I mean, it's up 30% in the past 6 months, but the orders are flowing in thick and fast, especially into the defense vertical. You think there's a big upside even from these levels?
I think the industrial division is working positively, where basically the order book which was there is also turning into the last quarter, if you look at turning into the sales momentum, which gives a confidence because there has been a long pause before the order book got converted into a sales traction. So once the sales traction is coming in, along with the order book, which has been announced in last 1 month on the defense side, both for exports and for the domestic level, I think the confidence of the order book conversion into sales momentum is increasing, and hence the concerns on autos are overcome by the industrial division outperformance.
I got that. Pramod, so you said you like building materials as a theme, right? You still...
Housing and building material, both as the combination.
Okay. And what are your top ideas there, Pramod?
So we are looking top down. If you look at starting from cement, as I said, is Ultratech. Then we recently, in the high conviction, we moved up KAI industry. However, I think the run up in Kajaria, we have tried to move it out of the basket. So KAI is where we have recently introduced in our high conviction idea.
Okay. Ultratech, KEI, anything,
so we
anything
have
else?
we have a bunch of around in terms of the housing and infra, both as the theme. We also had Polycab, which I think has run up substantial. Again, we have moved it out for the... So the run up in the mid caps are much sharper to catch up with the analyst estimates. So these are the two I would say is where our comfort is standing on the housing front.
KEI has also done phenomenally well, right, Pramod? Valuations?
I think relative to the other peers in the segment, we feel the valuation and the execution possibility is risk reward is still favorable in KEI.
What about housing finance companies? I mean, because again, tied into this, home and building material, not building material, home housing theme, really. Do you have anything there?
So the way we are trying to play there is we like, as I indicated, in the large cap HDFC Bank, which is now seems to have absorbed the HDFC, and the concerns are well played out. And from here onwards with the branch expansion, we continue to like that in the large cap. We also added Sera now, which is again a positive beneficiary of the housing theme, which is coming through. And along with that, we have add-on Voltas, which is the, again, home furnishing in that sense. So those are a couple of 5 stocks which we like in the housing related sector. In terms of housing finance, sorry.
Yeah, go ahead, please.
So in housing finance, we always had the Spandana as a high conviction idea in this space. We continue to like the name and the home first.
Prabhu, tell us a little bit more about Voltas. That's been the big underperformer. Margins have been under pressure. They're losing market share as well. And the stock has come off considerably. The smaller names have actually been eating into the market share, it seems. You believe most of the bad news is in the price because valuation-wise, it's still not cheap.
So I think the first quarter was again a disappointment for the consumer durable space. If you look at, there seems to be some slowdown in demand. As you rightly said, the rundown in the stock seems we feel is captured. It started with the seasons being weaker and now getting the normalization. So we are looking for the second half runaway from the inventory being corrected, and the worst of the seasonal impact of the for the ACs are behind. And we look forward for a proxy play there on the home furnishing.
Okay. One more segment that you are bullish on is the mid-cap IT space. Within that, you have an ad rating on Coforge. You even like Birlasoft. And these are stocks that have run up quite a bit, right? I mean, Birlasoft in the last 1 month is up 15%. Coforge is up 20% or so. Do you think it's the return of the mid-cap IT space now?
I think the relative outperformance has been clearly seen, right? In the large caps, we have seen the guidance and also in terms of the earnings cut coming through. So I think the momentum in overall mid-cap space and relatively better segment-wise performance for these two companies has been able to help them outperform per se. Like having said that, we have recently downgraded Persistent from that space, considering the risk-reward not being favorable. So we have been choosing that. Sorry.
Okay, thanks a lot for joining in, Pramod. Appreciate your time here on CNBC TV18. Well, that's a whole host of stocks that Pramod Amte of Incred has discussed, especially in the mid and small cap space. But let's talk about the Reliance AGM that took place yesterday. There was a succession plan that was put in place. There was lots that the company spoke about across its verticals. Harshvardhan Dole, Vice President, Institutional Equities at IIFL, joins us now to discuss the key takeaways from the 46th AGM. Harsh, thanks a lot for joining in. Your key takeaways, and is there any trigger for the stock at all?
See, while most of the things were already known, what came out positively is reiteration of three things. One, Reliance will continue to focus on businesses where essentially runway for growth is significant, be it clean energy, data, or essentially the consumption, or essentially being a one-shop stop for meeting all the consumption needs for average Indian. That came out fairly well. Secondly, the timelines in terms of green energy were quite positive, that while Reliance has not talked in great detail about what is happening on the execution side, at least there is an iteration that continues to be a good focus area. But what we were slightly disappointed to hear is there was no timeline in terms of the demerger. And to that extent, honestly, the stock might see some disappointment in terms of the near-term movement, because per se there is no trigger left, unless the pricing for the Jio Air Fiber is so disruptive that it starts surprising in terms of execution.
Hi, Harsh. Good morning, Harsh. The growth drivers are going to be Jio as well as the retail business. What kind of, what are you factoring in terms of growth in both these two segments from here on? Maybe in ARPU as well as in the retail segment, which has grown very, very well.
See, retail has continued to surprise. And in terms of growth, we are building in a 20% CAGR in terms of sales. And we are hoping that the operational leverage will kick in from here on, because most of the stores that have got added in last 2 years. And those will start approaching maturity level in probably 3 to 6 months' time. So FY25 will be an inflection point for the retail business. And to that extent, we are hoping that the EBITDA growth will be much more than the sales growth over the next, 3 to 5 years.
Okay.
On the Jio side, clearly, on the Jio side, clearly there is no ARPU increase that we have baked in FY24. And in FY25, we are hoping that at least the ARPU will go up by 12 to 15%. That is what our, DCF value for the Jio business captures in.
What about the new energy business? Just wanted to understand what is the kind of SOTP once it starts contributing from next year. What are you looking at?
Well, that's a very interesting area. Because RIL has continued to maintain that for initial few years, as the technology gets stabilized, much of the output will be consumed in-house. So unless they kind of surprise in terms of execution and start selling and offering these services to third parties, any meaningful contribution to the EBITDA looks unlikely until FY25-26. But having said that, the stock will start pricing in, much of the upside when the first module of the solar PV starts coming in, probably by FY24-25. In our SOTP, I think we have ascribed close to about $8 to $10 billion of value, which is predominantly coming from the solar value chain. I think the street will start ascribing more value and they will get more constructive when the timelines for the other businesses such as battery packs, hydrogen, and even the fuel cells, those are made clear.
We've talked about a lot of the new businesses, but I wanted your thoughts also on the traditional businesses, the oil to chemicals, even the refining margins. They've actually been improving for the last couple of quarters. What's the outlook over there, and what's the expectation over the next few quarters?
See, I think there is definitely demand-supply mismatch in the near term, and for which the GRMs have seen a spike. And in my opinion, that should last for next couple of quarters, and that bodes well for a player like RIL, which has got ability to process any type of crude and yet produce high-quality products. But having said that, I think I'm a bit cautious on the petchem side, for which I think on an integrated basis, we are factoring in a flattish kind of performance for the entire O2C business in FY24 as well as 25. So unless the global consumption materially surprises in the second half, led by China, probably, we'll keep our, optimism under check.
Harsh, that comment, I'm sure that you heard that, right? Where Mr. Ambani said that, well, value creation in the future will be multiple times of what has been done in the last 40 years plus. That was a table-thumping, confident kind of statement. What did you make of it? And what does that kind of tell you about the mindset that the group is looking at the future with?
See, as the share of capital employed in the new economy businesses, which is telecom as well as retail, that goes up. These are the businesses which can actually contribute much more meaningfully to the EBITDA. And these are the businesses which typically get a much higher multiple as compared to the old economy businesses. And which is logical that if retail and Geo are going to be the growth driver going forward, along with the financial services which will be undertaken by JFS, logically the market cap increase in the next decade or so should be much more than what it has been in the preceding decade. So it's basically share of high multiple business in the overall EBITDA going up that should bode well from the overall valuation perspective.
Okay. Finally then, Harsh, on the stock itself, what is your view now that, of course, GFS is listed separately. So, you have to cumulatively look at that because shareholders have both Reliance Industries as well as GFS shares now. What is the outlook, say, over the next 6 to 12 months on the stock itself?
See, one should bear in mind that RIL beta over the last, 2.5 decades has started to come down. And that's mainly because as the share of low volatile businesses, which is consumer facing businesses, their share of in the capital as well as EBITDA increases, the volatility in the cash flow will meaningfully come down. So that means as a shareholder, I should be structurally prepared that RIL in short term to medium term will not outperform the market. And that actually bodes well for a very serious long-term investor. Having that in my mind, I think RIL stock will continue to offer 15% plus compounding, which is a very good, handsome rate of return in sync with the overall earnings growth. And that should attract any good institutional investor as well as a serious HNI.
Okay, we'll leave it at that, Harsh. Thanks a lot for joining in. Appreciate your thoughts here on CNBC TV18. That's the highlights from the Reliance AGM and what you can expect from the stock. But the market looks like it's going to open in the green. So on the other side of the break, Anuj will join in for a quick trade setup. Post that, we'll bring you the top stock picks for the day from our technical and F&O experts. Stay tuned.
Okay, welcome back. You got the market pre-open coming up in 13 minutes or so. Let's just quickly take a look at the GIFT Nifty. The open was a subdued kind of one. And as I was pointing out earlier, yesterday the market ended higher, but it was a, not indecisive session or doji. I mean, open and close were similar. So this morning, 40 points higher is what we have on the GIFT Nifty right now, right before open. Anuj is here, as always, with a quick look at how he's looking at the trade setup. Anuj, morning.
Morning, Prashant. Well, first of all, to you and to all our viewers down south in Kerala, happy Onam.
Happy Onam.
I'm looking forward to the, to the treat that Prashant is going to give us this afternoon. So, not carrying my lunch.
But that's a nice one.
He's promised us payasam tomorrow. So
okay, so let's wait for tomorrow then.
But you have to buy him lunch also
since
because he hasn't
he's not carrying lunch. Don't worry.
Not a problem. Anyway. Let's look at the market. I'm going to start with the table, and look, this is no commentary on any stock. It's just the volume and price action, and rest you make your own judgment. Vodafone Idea, 50 crore volume yesterday, 3.5% higher on stock. JP Power, 40 crore volume, 6.5% higher on the stock. You remember JP Associates, 18 crore volume, 18% was the price move yesterday. And I mean, and these are not alone. There were so many other names, Indiabus Housing, TTML, MTNL. I mean, I don't know when was the last time I saw an MTNL phone, but the stock was up 8% yesterday with 2 crore volume. What I'm trying to get here is that this is a serious FOMO factor in the market right now. Just plain and blind euphoria. One more example. Look at the kind of block deals that are happening by promoters and insiders over the last few days. And biggest of blocks are getting absorbed in the block window and stocks are rallying 10% after that. It's almost like, being more loyal than the king, and the promoter is ready to offload the stake. I mean, an example is APL Apollo, where the block is happening today. It's trading at 82 times price to earnings, 18 times price to book, and there's a good chance that it gets absorbed today very easily. It's easy to make mistakes in a market like this. That's the limited point. Anyway, coming to today's trade and the levels that I'm watching out for. On the Nifty, the first level that I'm watching out for is 19,367 to 19,382, which is yesterday's high and the 50-day moving average. So that's the first resistance. And the bigger resistance is the same that we discussed yesterday as well, 19,440 to 472. On the support side, you have 19,240 to 19,250, which is the recent low as the first support. And the bigger support comes in at 19,185 to 19,210, which is the option zone. On the Bank Nifty, yesterday's close was interesting because you had closed at 44,495, which is exactly at the falling 20-day moving average and just about 200 points away from the 50-day moving average. So that becomes your resistance zone, 44,526 to 44,610 to begin with, that 20-day moving average in yesterday's high, and 44,700 to 44,746, the option zone and the 50-day moving average. The support comes in at 44,300 to 44,350 based on options, and yesterday's low, 44,200, the previous breakout zone really remains the line in sand. As long as Bank Nifty is above that, I think traders would still try long positions. If you start to break 44,200, I think there would be trouble. Today's Fin Nifty is expiry. The last 4 expiries have not been kind to the Bank Nifty. So that's an added factor that you could look at in the Bank Nifty trade.
Okay, all right, Anuj, thanks a lot for that. Well, let's get in some calls on the index as well as individual stock calls. Mitesh Thakkar as well as Sudarshan Sukhani joins us on the show. Good morning, gentlemen. Well, Mitesh, you go first. The tug-of-war continues between the bulls and the bears. For the time being, it seems the bears have a bit of an upper hand because we're at the closer end of the range. How do you approach trade today on the Nifty and Nifty Bank?
Good morning, Ajay. So I think you're right to say that it's been a tug-of-war going on because the markets have become choppy. I still believe that this is more of a correction which has given some kind of price decline because every correction will have that. But more of a time-wise correction because I think we'll consolidate broadly between 19,200 to about 19,600, 650. And you might actually end up spending about 3 to 4 weeks because most of the weekly indicators are now turning flat between this range. Similarly, for the Bank Nifty, the level which I'm watching is about 43,400 on the downside to about 45,000 on the upside. And this range might also prevail for a couple of weeks.
Okay, Sudarshan Sukhani is also with us. Sudarshan, hi, good morning. This market has been so range bound. Is there any, indicator which suggests that we could break out of this range anytime soon?
Yeah, good morning. See, the range is very large and wide, but we have methods, or rather we are looking at short-term opportunities that can apply today also or just for a couple of days. And that opportunity is emerging. If you notice the Nifty is coming down to 19,300 support and for in some way or the other finding support at that zone. So now it is possible to say that at least for the time being support is holding. Therefore 19,300 becomes a buying opportunity with a very tight stop under 19,250. So the risk is very small if this support holds for a couple of days, even today or tomorrow morning. There is a trade on the long side of the Nifty with that stop loss. The Bank Nifty had a good day yesterday. I said yesterday that the Bank Nifty is a buy on dips, not the Nifty. That continues. The chances are the Bank Nifty has made higher lows and it could outperform. So for today, both indices are buy on dips with a very clear stop for the Nifty.
No, I think that makes sense. Gentlemen, good morning. In terms of specific trades, what would you put out? Sudarshan, let's start with you.
Well, Ashok Leyland is a buying opportunity, and I have three long ideas, and all three have the same pattern. Very large rallies, and then a trading range, and then what could be an imminent breakout from the trading range. So Ashok Leyland is a buy with a stop under 183. HDFC AMC is a buy, same pattern with a stop under 2450. And Lupin is a buy, again the same pattern, big rally, consolidation, expected breakout. Lupin is a buy with a stop under 1060. Dabur, which has a very messy chart, it suggests that a large distribution is going on, is an intraday short with a stop above 560. All the other three are buys.
Okay, all right. Thanks for that, Sudarshan. Mitesh, what about you?
Yeah. So I have Dabur as a sell call as well, and stop loss is about 560 half, and a target of 540 is what I'm looking at. But on the buying side is Axis Bank. Keep a stop below 979, 980, and look for a target of around 1015. Glenmark, we had a sell call a few days back when the numbers were announced, and the stock has corrected. Now it's showing signs of reversal. So buy here with the stop at 757 for a first target of 790. And Tata Chemical had a good breakout yesterday. That's a buy with a stop at 1015 for targets of 1080.
Okay, well, Manoj Muralidharan, who's the Vice President Derivative at Relicare Broking, is also joining in. So let's get him on board. Manoj, hi, good morning. Your thoughts on how to approach the markets now, and particularly on individual stocks? We've seen a lot of pressure come in from heavyweights in the last 1 month. You think that will continue, and what are the levels to look forward to?
Good morning, Sonia. Sonia, I guess this August series has been more or less flat, and the only difference is what we saw in July. There was perpetual long position from the FIR desk, but this time we are almost flat, and I'm afraid we are seeing some short rollover. A short rollover is when you see buying which happens into the August series in the index future, and then we see some shorting which is in the September futures, which is at a premium of 100 to 105 odd points on the Nifty. So the short roll is always an advantageous thing. So there is a possibility that 19,450 to 19,500, which happens to be the weighted average price of this short positioning, might not really get breached. So Nifty gets into a range of 19,200 to 450, as I mentioned, 250 odd points. But today being a Tuesday, this is a day when a lot of option selling or option writing gets into the system, and that obviously with perspective for the monthly expiry that comes in. So levels of 19 to 80, 280, that becomes a good level to go long with a 30-point stop loss. There is a possibility that the Nifty might give or inch up at least a 50, 80 odd points with 19,380 to 19,400 as a intraday target. Stock specific, I believe that ONGC is one stock which has been doing good at 175. It still becomes a good buy with the stop loss of 172. It has a potential of almost 181, which should be the short-term target. And stocks like Cipla from the pharma sector is also showing good, especially during the rollover time where we see this traction coming in because the position gets shift from August to September series. So 1210 to 1230 is a good level to go long, with 1200 as a stop loss and the target closer to 1270 on the stop.
Okay. All right. Thanks very much, Manoj. Appreciate you joining in and running us through all of those specific ideas. We'll take a quick commercial break here. We'll come back with a pre-open session. And we also have, by the way, the management of Gulf Oil Lubricants. Ravi Chawla, Managing Director and CEO of the company, joins in. They're acquiring 51% stake in EV charger maker Tyrix Transmission. Stay tuned. That conversation coming up.
Welcome back to Bazaar Morning Call. Well, for now, the market is all set to, the pre-opening rates are all set to kick in just a while from now. But Gulf Oil Lubricants is the first corporate on our radar right now. The company will be acquiring a 51% controlling stake in the EV charger maker Tirex Transmission. Now, this 103 crore acquisition is expected to expand Gulf Oil's play in the EV value chain. Ravi Chawla, who is the MD and CEO at Gulf Oil Lubricants, joins us now to talk about that. Ravi, thanks a lot for joining and appreciate your thoughts here on CNBC-TV18. Can you tell us what is the rationale for this acquisition? What is the overall game plan? And what's the expansion plan that you're looking at post this acquisition? How would you be expanding in this whole EV ecosystem?
Well, yes, globally and in India, we've been looking for Gulf to stretch into the EV mobility piece. We made an acquisition globally in India in a car charging company called Indra, which has got good market share in the UK. We've also tested their car chargers in India. We've also got an investment in a software as a service company called Electrify, which we have done. I think this is a major step for us to look at Tirex, which is into DC chargers. These are fast chargers for the heavy duty segments, and also they can make chargers for other segments. They are a good growing emerging player with good technology, good quality and backup. They've already installed 400 chargers and they have close to 8% market share. So this is in line with our strategy where, Gulf will obviously support them as a strategic investor, grow. We leverage our brand distribution, OEM tie-ups, infra. But importantly, Tirex has a growth plan which is to continue getting 10% market share with a market which is really promising, both in India, where it's expected to be 10 million units, in a few years. And globally, it's a multi-billion-dollar market. So these are the two things where we are very excited to see how obviously they have their own brand. They also do white label DC chargers. In addition, the Gulf brand DC chargers. So very promising area for us. And we hope that, in the future, this will become a good growth engine for us.
No, absolutely. I agree with you. I mean, fast charging is the new buzzword, right? Especially globally, more than in India. I mean, it hasn't picked up as much in the Indian markets. But I take your point about the export markets for sure. Just two quick questions. One, is this company profit making? And two, what is the kind of margin profile that you will be enjoying with this acquisition?
You see, this company has been in the market. As I mentioned to you, there are 400 DC chargers already installed and they're growing. So obviously the funds will help them to expand further to meet the future orders. And they will definitely start making money soon. At the moment, obviously, there's investment. There are 4 segments which are the public sector undertakings, electricity boards, the fuel sites. Then there is the OEMs which use DC chargers. Then of course you have the retail channel and the charge point operators. So there are 4 key segments. The profitability will obviously differ in each of the segments. So I think Tirex is well placed. They've already been there. They have a very good product. They want to localize more. And really these 4 segments, the pricing is different. So we have to be competitive. So it's definitely going to be a profitable segment going forward. Initial years, you do have to invest a lot. And with the investment, we'll be actually taking up our capacity multifold. And it would be literally, kind of doubling the turnover, more than doubling the turnover every year as we see as, the order book and of course the potential. Plus we'll be getting certification for selling these chargers globally. These are global certifications we'll take. So as you rightly said, the global market itself is a big upside. And, in India, we expect that the market will be about 10 million units by 2030. And the global is even multifold, a huge demand. Globally, this market is going to be 200 billion plus by 2030.
Okay. Right. So basically 1 crore units by 2030. That's the projection.
India, 1 million.
In India.
1 million. 1 million charges.
Right. And the market share, you said, is how much? 8% for this company?
Yeah, around 8%. The market is not clearly defined. We get numbers all the time. It's around 8%. Okay. And with Tirex, we are targeting 10% market share in India. We have not looked at the upside outside India because that's an area of work in progress, I would say. Yeah.
So I mean, just scaling these numbers on an Excel type of model, Ravi. Hi, good morning, Prashant here. What would be if they are able to maintain this, you said they'll add market share as well, but let's assume they stay around 10% all the way over the next many years up to 2030. What are the revenue you gave us a number of the chargers, right? If you go with that number, what will be the revenue? All else remaining same.
Yeah, as I told you, there are 4 segments. One is the PSUs and the petrol stations and all.
Got it. Yeah, I'm saying Just give us a broad ballpark idea how to think about this in terms of the revenue potential.
Yeah, so the way we see it, obviously, if you're talking about 10% market share, you're talking about 100,000 chargers by 2030 if they get 10% market share, and the current value is around I would say more than 7-8 lakhs per unit. We will also be trying to get into with this make the other type of chargers with them. So mix of that will obviously indicate that in 5 years time, if we do get 10% share, you can do the math. If it's at 7-8 lakhs per charger, it's a decent revenue which will come.
So 10 lakh units into 7-8 lakh per charger. That's the broad number. That's what we should work with, right?
5-6 years, if that is what we are. And of course, we'll have different type of chargers. So not all of them, we might go even to some AC chargers to be assembled here. So it'll be a mix of, I think, high end and also medium end.
So 200 crores of cash is what you have on your books. 130 crores is what you've used for the Tyrex acquisition. What will the rest be used for?
So we are a cash generating company. So we do have more cash than that in terms of our fund flow. We have closed more than 400-500 crores in our fund flow. So this is obviously part of it, and we continue to generate cash every year with our core lubricant business, which will continue to grow. I would say similar to what the growth has been last decade. We see the same growth continuing in core lubricants, and we have a lot of market share to gain. So we will continue to generate cash. And obviously, we give dividend and we look at investments. So there's enough cash in the books to kind of fund these kind of investments.
All right, Mr. Chawla, hi, good morning. Clearly an interesting acquisition out there. And as you said, you'll be looking at doubling your revenues in the next few years or so. What kind of capex will you have to spend for this? And if I just do that doubling from year on, last year it was only around 13 crores odd. But if you keep doubling your revenues, you'll be in the vicinity of around 2,000 crores approximately. Maybe in the next 7 to 8 years? Or is the number larger than that? So what kind of capex? And also, will you be looking to buy the remaining 49% at some stage?
No, see, when I said doubling, I said Tyrex itself today has 8% market share, and we look at that going up multifold. Our core lubricant business, the revenue is around 3,000 crores. That will grow.
For Tyrex itself, sir. For Tyrex itself. Yes, what is the ballpark revenue number?
Yeah, so Tyrex, if we look at 8 to 10% market share in 2030, when the demand is going to be 1 million chargers. So if we get 100,000 chargers at a 7, so obviously we are talking more than 500 crores, 600 crores kind of revenue in 5 years. So certainly that is what this sort of strategic investment will give. We continue to work. The Tyrex team has got inherent strengths where they have made the technology happen. They have focused on this. So we continue to being, supportive. They are going to be with us. We're obviously going to make the company go further. So it's current. There is no plans to look at it. And this arrangement of 51% is more so that we are a strategic investor and we can also guide the team to grow further.
So, Ravi, sorry, you said 100,000. It's 1 million, right? Not 100,000 by 2030.
No, 2030.
Or 1 million. Sorry, 1 million is okay. 1 million is by 2030, the installed base of chargers, and 10%, that's 100,000 for you. Okay, just wanted to clarify that.
At 7 lakh, that comes to 7,000 crores, but right?
No. It will be less than that. I think it will, as I told you, all the chargers will be not 7 lakhs. There'll be some smaller chargers we'll make. So as a mix of that, I think top line will be, more than 500 crores if we get that market share.
Okay, so 500 crore of top line. And in this EV ecosystem, anything else that you'll be looking at? I mean, now that you're, looking at the huge potential here, apart from these DC chargers, anything else that you're eyeing?
Well, we have a brand, we have touch points right across, we have OEM relations, we have infrastructure. So I think for us, the two-wheeler segment also is quite an exciting segment. So we are looking at, options there. I think with Tyrex, obviously the charger part, and with the global acquisition of Indra, we have the charger space. And then we also have software as a service. So we are going to look at a few areas, especially in the two-wheeler area, where we can use our brand distribution and our touch points. So definitely looking at some areas. Once we are clear about it, we'll definitely come up if we have focused on a target or a strategic investment. We hope that we can come up with some options here.
Okay, we leave it at that. Thanks a lot for joining in. That's Gulf Oil Lubricants. But let's get back to the market now. Let's get some 9-10 calls going. Looks like it's going to be a positive start, up almost about 70 odd points. Sudarshan is back with us. Sudarshan, what's the big call at 9-10?
Well, Lupin can be considered for buying with a stop under 1,060.
And Mitesh, how about you?
I'll go with Tata Chem for a price target of 1,080 and a stop below 1,050.
Okay, Surbhi is also with us to talk about the Momentumizer stock of the day. Surbhi, over to you.
So on my list today is Confidence Petro. In yesterday's trading session, you saw the stock was higher by 10%. In the last 1 month, it has gained over 17%. In the last 6 months, it's gained over nearly 50%. Now, in yesterday's trading session, the delivery and the traded volumes both were high. The delivery volumes were close to 2.5 times the 10-day average, and the traded volumes were close to 3 times the 10-day average. The management of the company had joined us 10 days ago, and they said that they're targeting 500 LPG dispensation stations by 2025. They see growth coming from the LPG retail stations as well. They are targeting a growth of 40% this year, and they will also be depledging all of their shares this quarter. So a lot of things are working well for this company, and that's why it's on my Momentumizers list.
Okay, thanks a lot for that. Another stock which has been doing very well and could see a further up move is Bharat Forge. Now, yesterday, the company's defense arm, Kalyani Rafale Advanced Systems, reported another order. So, they secured another contract worth almost 300 crores. This order is from the Indian Ministry of Defense for supply of missile systems, and this order will be executed over the next 12 months. Now, remember, Kalyani Rafale is a joint venture between Kalyani Strategic Systems, which is a subsidiary of Bharat Forge, and Israel's Rafale. So, this, of course, is a positive for them. Remember, apart from this 288 crore order, the company in the recent past has reported export orders worth over 850 odd crores. So the order pipeline is definitely picking up in this space. Nomura put out a note where they have a buy with a target price of 1157 on Bharat Forge. They say the defense vertical continues to report new orders. The total defense order book is expected to rise to 3,300 to 3,400 crores over the next 2 years. And even on the valuation front, it's not looking too bad. The company is trading at 15 times FY25 EV to EBITDA. The stock is attractive given the 31% EPS CAGR. So that's another stock on our radar. But steel stocks is what you're watching today.
Well, that's right, Sonia. I'm watching steel stocks because we have a Phillip Capital note. They are mentioning that, in fact, in India, primary long steel prices have been hiked by around 1,500 rupees per ton. It's the fourth hike that we have seen since August itself. And for the month itself, steel prices are up by close to 3,500 rupees per ton. Now, that's the highest that I've seen in a single month after a long. What are the reasons? Well, strong pre-election demand. That could be one of the reasons. The second one is we have seen one of the driest August in the last many, many years. And the third factor is input costs have gone up. So you have raw material cost of coking coal as well as iron ore cost have gone up. Who are the key beneficiaries? Well, JSPL. A bulk of their mix is towards longs, and the other couple of names should come up. Sham Metallics, you have Sarda Energy as well. So those are the key beneficiaries. Price hike coming about, and in all likelihood, it could sustain. But let's hop across to Rima. She's here to talk about Indus Stars. Rima?
Thanks so much for that. So Citi has come out with a note on Indus Stars where they have a positive catalyst watch on the stock, a buy rating, a target price of 210. The first key reason is they believe the valuations are cheaper than what peers are reporting at. Now they're comparing the valuations of Indus Stars to Brookfield's data InvIT, where they're saying the EV per tower valuation is 40% cheaper. And if you look at the EV to EBITDA valuations, they're saying it's practically half of that of its competitor. They're saying that the valuations don't make sense. There is a disconnect even after you take into account that there is some trouble with one of its big clients, anchor clients, Vodafone Idea, which has close to about a 30% tenancy. According to Citi, even if you take that into account, there is still a valuation disconnect. The potential triggers going forward, if there is a completion on Vodafone Idea's fundraise, it will be a big positive for Indus Stars. And secondly, the reinstatement of dividends. Back to you.
All right, thanks a lot for that. Well, we're just heading into the market opening in about 2 minutes from now. It looks like it's going to be a positive start. Mitesh is still with us. Mitesh, the steel stocks looks like they're going to come back. Tata Steel, JSW Steel in the green. Any thoughts here?
So, I've been looking at JSW Steel, and in fact, it's given a good correction from 800 plus levels to now at 770. And there is a weekly pivot over here. So I'm hoping that if the stock starts reversing, getting past 790, I would look at a long trade over here. Tata Steel per se, I think, is more of showing sideways action on the longer term charts. But a breakout will happen if it can get past 125, 126 levels. I think this month's high is also 124. I think if we start getting past that, then I think, you will see a medium-term trend start on the exit.
Okay, and all right. Well, we just have less than a minute for the market to open, so we'll just drill it down to the market opening now. Looks like it's going to be a positive start, but the market has been very, very range-bound between that 19,200 to 19,500 mark. So let's see how today goes, whether we can build on to our gains. The resistance level is still around this level itself, which is the 50-day moving average at 19,375. So keep that in mind. Global cues have been pretty good. In fact, this morning as well, most of Asia is trending in the green, including markets like Hong Kong, Taiwan, etc. And a couple of cues for our own markets to watch out for. On Thursday, you have the Q1 GDP data that comes out, the August series expiry. On Friday, you have auto sales as well. So all eyes will be on that. A couple of key stocks to look out for as well. As we said, the steel stocks have been doing well. And a couple of these banks perhaps could come back in a big way. So HDFC Bank, which has been a huge laggard in this month itself, HDFC Bank is down 5%. Let's see if there is any pullback on these names. Okay, here's the first take on the index now. Not bad actually, 60 points higher on the Nifty. The sensex is up about 200 odd points. It's a decent start. Let's see whether we build on to our gains or not. The bank Nifty is up about 120 points and the advance decline ratio is well in favor of the advances as we speak. The big gainers this morning are in the metal space. JSW Steel is up about 0.7%. You have HCL Tech, UPL, Tata Motors, ICICI Bank that are all trending in the green right now. And a couple of these other names like L&T. L&T has actually been a big mover this year. L&T is up almost about 30% odd, so looking pretty smart over there. Apart from that, Hero MotoCorp, Bajaj, Finserv, Hindalco are a couple of other stocks that are trending in the green. What's not looking good is Reliance, which in any case has been a drag for the market lately. So Reliance is down about 0.3%. Tata Consumer Products, Axis Bank, Bharti Airtel and Apollo Hospitals are a couple of other stocks that are in the red right now. But otherwise, it's a decent market, you'd have to say, just consolidating around that 19,300 mark. A lot of stocks in the broader markets are hitting fresh highs, whether it's RailTel, Federal Bank, Gokuldas Exports, more on that later. Bharat Forge, Arvind, Precision Camshafts, these are stocks that are at fresh 52-week highs. So clearly, I mean, all the action continues to be in the broader market.
Absolutely, Sonia. You know, the screen is looking quite good, but one stock that's under some pressure is APL Apollo Tubes. That's down close to around 3% odd because the promoter entity will sell close to around 1% stake in the company. So that explains why that is a little bit under pressure. Pyramid Enterprises pulling back a little bit, down close to around 2.5%. Union Bank as well appears it's down close to around 6%. We'll try to check more on that. But that one, in fact, is one of the top losers on the F&O counters itself. On the flip side, you have a few names that are doing quite well. Genus Power, second day running, you know, it's just a minute into trading session, but it's locked in upper circuit. It's up close to around 5% approximately. India Cements as well has opened up high with a gain of close to around 2%. But the clear stock of the morning, I think, is Gokuldas Exports. The acquisition will add nearly, just going by their last year's numbers, will add 30% to the revenues and 30% to the profitability as well. The stock has already run up close to around 15%, but the valuation-wise, they've got it spot on. And also, since it's headquartered in Dubai, maybe they'll get some kind of a benefit of lower taxes as well. Explain why that stock is up 6%. Prashant, what else?
Well, Nigel, it's a good-looking screen. Like yesterday, we're up 40 now. So 19,340 is where we're at. Market breadth is extremely positive. Some, I think, 2:1 in favor of advances. And as you pointed out, Gokuldas, of course, is the star mover. The high today is 674. It's come off about 20 rupees after start, but that remains by far the biggest mover with volumes. Patel Engineering is another one, which is up 5%. Stocks at about nearly 60. You know, these smaller names, which Anuj was also pointing out, Jayaprakash Associates and Suzlon, and there's stuff happening with each of these names, but they're all the moves are all coming up together. JP is up another 2%. There was a big mover yesterday. Actually, it went up 10 Friday. It went up, I think, 10% yesterday. And it's starting about 2% higher right now. The volumes are there, so that's why I'm mentioning it. RailTel is up about 2%. Suzlon has had a good week and good month so far. It's another 4% higher. Gone up very fast to almost 25 rupee levels now. SJVN is up about 3.5%, 63. So yeah, I mean that's basically what we're seeing. Jamna Auto is another one which is up, but Genus Power, look at that one, 5% again this morning after the 10% move that we saw yesterday. So very strong gains. APL Apollo, Geofin is down 1.6%, 208 or so on Geofin. Reliance is down another 0.75%. I think the stock ended about 1% lower yesterday. Piramal, there was an analyst meet yesterday, investor day actually, 2% lower, 1,083 on Piramal Enterprises. That's a financial services business. Indiabulls Housing spiked yesterday. It's pulling back a little bit. And GMDC, some of the big movers. Atul Auto has had I think it's up 25% in the last few days. It's down about 3.5%, so some pullback there coming through. So that's broadly the lay of the land. 30 points higher is what we have on the Nifty so far. Saurabh Mukherjee is now with us. He's a market master of the day, founder at Marcellus. He's with us here in our studios. Saurabh, a pleasure that you could make it. Thanks very much.
Good to see you. Good to see you guys in your home territory.
How are you feeling about the market, Saurabh? Looking good?
I think, look, this is the best macro I've seen in the 15 years I've lived here, both in terms of growth and in terms of the interest rate outlook. I don't think the central bank has said anything at Jackson Hole, which alarmed me. We are close to the top of the rate hike cycle. Economy is in good shape. We're seeing foreign investor flows back in the market. Yes, we got a bunch of elections ahead of us, but going into elections with current account deficit sorted out, the interest rate outlook in a decent place, GDP growth in a decent place, I think this is the best market set up for a long, long time. And, it's not as if the markets run away from us. I think YOY, the market's up 10%. So it's all set for a super foundation for an extended period of an extended upswing in the Indian market, and we're encouraging our clients to especially build positions in our small and mid cap portfolios, little champs and rising giants. But even in the large cap space, I think Sonia just mentioned, big names in HDFC Bank look extremely tasty to us.
You didn't start by saying this is India's decade.
I don't have quite a crystal ball that powerful, but a few years, the next few years bode pretty well.
We have heard that so many times now that, we thought you'll also be chiming in. But no, I mean, jokes apart, the action is in the mid-cap space, right? I mean, the Nifty is up 6% this year, but the mid-cap index is up 20% already. So do you think that there is a bit of euphoria, a little bit of, left-out feeling in the market, which is taking anything and everything up? And could that be a bit of a cautious sign?
So I'll tell you why people like us are getting excited about mid-caps. If you see the Nifty 50, there's a bunch of PSUs in it and a bunch of metals and mining names whose underlying earnings compounding is pretty weak. And with the war in Russia, Ukraine having sort of peaked, and China on a deflationary trend, it looks to many of us that the Nifty there'll be a bunch of companies exiting the Nifty, and the entrants are likely to be high quality mid-cap names. And that's what's, I think, leading people like us to say, let's look at, say, some of our mid-cap holdings, names like Cholamandalam, ICICI Lombard. These sorts of companies look to me to have a far better structural tailwind than, say, oil marketing companies or metals and mining companies, who I think had a great 2022, but I think the best is behind them, and hence they're interested in mid-caps.
Hi, Saurabh. Good morning. Metals and mining may be a bit of a dizzy, but you're playing the refractory space, right? I think so. RHI, Magnesita, they've done a couple of big acquisitions. Last quarter's numbers weren't that great, but you believe that the outlook from here on is good? Are you a buyer at current levels?
So we built a position on the basis of three things, Nigel. Firstly, we see the sort of dominance RHI has in the refractory space. This is very similar to a GMM Pfaudler position built out 4 or 5 years ago. You're looking for a player who dominates a critical space. So a steel company struggles to make free cash flows in the long run. But RHI is a critical ancillary supplier for the furnace of the steel company, 40% market share, 35% ROCs, and that's the sort of first foundation of the position. Secondly, GDP growth 7-8%, I think, for India over the next decade should be doable. Typically, steel output grows at broadly the same rate as GDP growth, and hence that's the second impetus here. The steel sector will grow. I'm not sure steel companies will make a lot of free cash flow, but the sector will grow. RHI should benefit from that. And the third piece is consolidation in that space. So RHI bought Dalmia's business last year. The smaller refractories are sort of folding up. I think it sort of boosted RHI's top line by around 33%. They had an exceptionally good last year. I don't think this year will be as good as last year. But if I take a 4 or 5 year view, a business which is dominating its space with 40% share, strong ROCs, strong cash flows, the ability to consolidate the smaller players, it gives us fair bit of visibility that this is a good small cap for our Little Champs portfolio.
We actually spoke with the Tega Industries, right? I mean,
they are the mill liners.
So it just kind of reminds me of that kind of a business.
That's a good company as well. We don't own that, but I think Mohan has built a good company.
It feeds into the steel.
That's right. So the ancillary, always look for the choke point. Look for the players in a commodity industry like steel. Look for the choke point. Look for the players who are hard to replace, where there are substitutes few and far between. Tega would be a similar sort of company.
What about GMM Pfaudler, Saurabh? I mean, that large overhanger, that sale is gone.
Absolutely.
Is it, looking set for a turn?
So if you look at GMM for the last, I think, 5 years, Prashant, profit compounding has been around the 40-50% mark, right? The shares haven't done much for the last couple of years, courtesy the overhang of the German private equity player. You're right, with Chris Capital having acquired that position, I think the future bodes well. Our reading of the situation is there continues to be a shortage of APIs, specialty chemicals related to pharmaceuticals. GMM is the global leader in that space in supplying ceramic reactors, glass-lined reactors to that space. So the earnings outlook is good. With the overhang gone, I'm optimistic that we'll make money here. Just a quick disclaimer, in all of these stocks, I hold positions through our PMS, so do my parents, and so do our 10,000 clients.
Obviously, okay. We got that. In your Little Champs portfolio, you also had Metropolis, and that one has been under a lot of pressure. I mean, the entire industry is going through some sort of weakness. Metropolis margins had been in multi-quarter lows. You continue to keep the faith here?
Right. So we have Dr. Lal in our large cap portfolio. We doubled that position in the summer of last year. In our Little Champs portfolio, we have Vijaya Diagnostics and Metropolis. The reason for building these positions was we thought last year the market got it wrong in terms of this sort of notion that there is disruption in the path lab space. I think the private equity and VC-driven players are by and large gone. The money has run out. We don't see the challengers being particularly credible. And therefore, Dr. Lal in North and East, Metropolis in Western India, and Vijaya Diagnostics down South, we reckon are the best placed players. Volume growth is revenue growth ex-COVID. Ex-COVID revenue growth is largely recovering to the levels it was at, let's say, in 2019, Sonia. Margins, we reckon, will recover. Pricing power is coming back to the leaders. It's a $10 billion industry. Barely $2 billion is in the hands of the organized players. So massive scope for formalization. So stay calm and continue building that Metropolis.
But in the management's own admission, right, whether it's Vijaya Diagnostics, whether it's Metropolis, they've spoken about how this B2B segment is seeing a lot of competition, especially in specialized tests. Then there is the wellness business, which is seeing a lot of competition as well. So, I mean, I understand that you continue to keep the faith here, but for an average investor, the losses have been quite steep.
So if you look at the share price action, Dr. Lal halved in the first 5 months of 2022. Since then, it's not gone down. In fact, it's gone, I think, around 10-15% up. Secondly, operating margins for these players are higher today than they were before COVID. Obviously, during COVID, the operating margins went through the roof, courtesy RT-PCR. But if you strip out the COVID years, operating margins today are higher than they were before COVID. And thirdly, all three of these companies are generating cash flow, right? So the thesis last year for a lot of bears on this space was there is disruption. Our view was it's rare to see disruption if margins are going up and cash flows are strong, and you're seeing the weaker players exit the industry. So COVID in a way was bad news for the incumbents because it brought a lot of private equity money into the space, and it brought sort of weaker players. It gave the weaker players a chance to compete with the stronger players. With the tailwinds of COVID gone, I think the place consolidates again around 3 or 4 leaders, and it makes sense for us to therefore build those positions when the share prices are weak.
All right, a sort of final question before we let you go. Just going to ask my director to pull up the HDFC Bank stock year to date as well as the Nifty. It's been an underperformer by more than 10% odd. We started this conversation where you briefly mentioned about HDFC Bank. Do you think it's getting into that zone, what ITC was, say, a few years ago? Rank underperformer, well-run company, valuations in favor, but the stock doesn't move. And now it's more important for Nifty because it's the largest component
There's
out
a big difference, though. If you look at ITC in the difficult years, their reinvestment in the business had tailed off, and as a result, earnings growth had moderated. In HDFC Bank's case, it's been the opposite. Since Shashi Jagdishan took charge, these guys have gained market share both sides of the balance sheet at around 20-21% growth a year. So 7% market share 5 years ago to 12% now. In effect, they've added a bank the size of Kotak Bank in 5 years. Secondly, the main reason I reckon the market is not sort of being able to wrap its head around is the sheer scale of what's being built here. The HDFC Limited acquisition basically makes this company the most profitable company in the country by some distance, right? And our country simply hasn't seen a company generating 11-12% of the nation's profits. There is a big ask here. Shashi and team will have to build 1,500 branches a year for the next couple of years at least to fund the HDFC liability franchise. Our reckoning is they'll pull this off. They did it last year, 1,500 branches. I reckon they'll pull this off. In the first 3 months of the current calendar, they pulled in CASA, which was equal to a quarter of the nation's CASA. So some of the numbers these guys are pulling off are phenomenal, and I think the sheer scale of what's happening here is befuddling the market. We remain confident. I think it's around 10% of our flagship portfolio, and our reckoning is this is probably as good an entry point people will get into the leading bank in the country. Probably the price to book, this is the cheapest it's been for 20 years.
Anything new you've added in the financial space? I mean, there are lots of these high growth housing finance companies.
So we've had Aavas and Home First for a couple of years. Aavas, there was a CEO change at the top, so Sushil Agarwalji stepped away. Shachinder, who came from Kotak, who built the Kotak housing finance business, is doing a great job. So we remain confident there that Aavas will do well. I don't think we'll be adding plenty of new names in financials. If we see further weakness in some of the better run housing finance companies or say HDFC Bank, we might load up further. Prudent Corporate is the only name we've added this year. I think early months of this year, we added Prudent Corporate, which is a mutual fund distributor.
Just one, final question. In your Little Champs portfolio, you also have V-Mart Retail, and that one has been, if you just pull up the chart, I think it's lost 30% in the last 12 months. And, even if you look at the numbers, right, the losses are just widening for the company. So what do you do at a time like this?
So in V-Mart's case, I think the challenge is threefold. I think Reliance Trends has opened 2,200 stores, I think, in the last 4 years. Secondly, online, right, Meesho and Myntra have been very effective through the COVID years. And thirdly, Northern India, which is the heartland of the V-Mart business, the Hindi-speaking towns of Northern India, there's generally a downturn in blue-collar workers' revenues. The management team is aware of the challenges. They're trying their best to turn things around. Our reckoning was the quarter that went by. Although earnings were negative, on a cash flow basis, 1Q of this year was probably the best quarter for a couple of years. So in V-Mart's case, Lalit Agarwal and team, they're trying their best to turn things around. But it is I agree with you, Sonia, it's a steep hill for them to climb because you've got Reliance's muscle. You got the Meesho, Myntra, because the online is turning out to be very effective in the Hindi-speaking towns.
Tatas are getting into low-cost fashion in a very large way. I mean, they're doing, and I think Reliance has introduced a new brand in that particular segment, which they plan to expand. I mean, so yeah.
So look, I mean, Zudio is doing brilliantly for Trent, but I think thankfully for V-Mart, Zudio isn't yet the biggest challenge. I think it's Reliance Trends, which is the biggest challenge in the Hindi belt.
Okay, Saurabh, appreciate your time here. Thanks a lot for joining in as always. And thanks for coming to the studio. Hope to see you more.
Great to be here.
Thank you.
Just one more, Sonia, just one more comment before we move on. On Bharti Airtel, there's been close to around 1 crore shares that have changed hands, when you have the chat with Saurabh. So I think we should keep an eye out on that one. Big, large trade is what we saw then. That explains why that stock did come down a little bit in the last few minutes.
Okay, by the way, Gokuldas Exports is really the stock of the moment, right? 12% higher now on Gokuldas Exports. We'll get to that in a bit, more details coming up. But in the meantime, we also had the Reliance AGM yesterday, and of course, there were lots of takeaways on the Jio business with respect to Jio Air Fiber and a whole host of other things, the smartphone as well. Sanjay Kapoor, former CEO Airtel and telecom industry expert, and Nitin Soni, Senior Director Corporate Ratings at Fitch Rating, join us now to talk about that. Gentlemen, morning to both of you. Sanjay, good seeing you after a while. Let me first begin with you. What was your key takeaway from the the AGM yesterday, and what is the read-through for the telecom sector?
So, Sonia, good morning to viewers and all of you. I think yesterday's meeting is now consistently telling you that there are no price announcements anymore in the AGM. So I think Jio is very clearly wanting to retain their market leadership, and now through differentiation with product offerings and technology to make customer experience better. I think that is what comes out as a thematic from what happened yesterday without the pricing announcement. So they're not playing the pricing game anymore. Now, the sort of things that they announced yesterday are very obvious for a telecom provider and especially a leader in the market. So when you talk about, the last mile connectivity through 5G or, wireless fiber or whatever name you want to give it, it basically is saying that in a nation where the fixed line penetration is exceedingly low, the last mile, which is very difficult to connect everywhere and not fungible either, will be connected through 5G, which is a very obvious choice. So fixed wireless access globally is a use case on 5G that operators are wanting to monetize when there is lack of real monetizable use cases on 5G. So the jury is still out on 5G as to how 5G investments will be monetized. But FWA is definitely one of those. And I think Reliance is wanting to chance that out to see in a country where fixed line penetration is very low, they must do it. The second thing that they talked about was immense use of AI. And AI is, again, something which is very experimental at the moment. There are about 30, 40 applications that various operators are trying. I'm connected with many of them. Things like computer vision, image processing, basically chat GPTs, where they are trying to build in use cases around content recommendation, customer care. There's speech to text analytics for customer care that's happening. People are using Google Knowledge Graph for content evaluation, also outbound sales, etc. AI-based generation is there for sales management, and the unstructured data that sits on tweets and everything else. How do you make sense of those? So I think there are many experimentations going on, but really seeing what's there for the customer. I think for the customer visibility, there's probably the digital assistant that could become better and recommendations that could become better. But there are again, challenges around customer privacy, data privacy, and all that stuff. So I think this is again something where, what will really take shape, where customer stickiness will be created and monetization will happen, is still not very well known. But I think it is good for the market leader to experiment all permutations, combinations to see which are the winning ones.
Oh, absolutely. And as you said, right, you started by saying that pricing is not their focus at the moment. Their focus is more growing the pie, growing the business. And in that context, they want to increase their presence in Jio to 200 million, double of their earlier target. And they are currently connected only to 10 million homes. So the reach, I guess, is their focus area. Nitin Soni is also with us. Nitin, do you think this target of increasing their presence to 200 million, is it very ambitious according to you? And we don't have too much clarity on pricing just yet. So how would you assess things going forward?
Yeah, thanks for having me on the show. So firstly, I should tell the viewers that which rates Reliance Industries at BBB flat stable on foreign currency rating and BBB plus stable on the local currency. Now, we do believe that this Jio Air Fiber will expand the India's home broadband network and the market, and it will accelerate the availability of 5G fixed wireless access across the country, as Sanjay was explaining. And a lot of the other telcos in the regional markets are doing the same. As they launch 5G, they are using the fixed wireless access solutions to accelerate the availability of home broadband in their respective countries. So it will not only expand the availability of 5G in urban areas, but also in rural areas where rolling out the fiber is a big challenge, and it involves a huge capex and operating cost. So it will also save the company a bit of a capex and operating cost, because they won't have to maybe roll out fiber so aggressively, and may rely on a Jio Air Fiber or a 5G fixed wireless solution. So we have seen both Bharti and Jio so far have only 6 to 10 million home broadband customers. So their target of 200 million definitely looks quite ambitious. But in our forecast, we obviously will be conservative and we'll be building a smaller edition of home broadband. But this will definitely, accelerate the market in terms of home broadband additions.
Okay, so that is on Jio Air Fiber, right? I want to talk a little bit more at length about the artificial intelligence, move. I mean, there was a lot of focus on it, and Sanjay, I want to come to you on this. The company plans to create up to 2,000 megawatts of AI-ready computing capacity across both their cloud and edge locations. So they're going big in this space. How do you think this will impact the incumbent players? Who gets hurt the most? Who benefits? Your thoughts?
Technologies like AI are a given now, and they are cutting across sectors. Even the non-technology sectors have to consider AI very seriously and to really make some business sense out of this. The challenge is that when you compete in a market for customer perception and customer experience, how will all this translate into a better experience will decide the winners, right? To have internal measures, of course, will bring your indices to look better.
internally because your hit rates will improve. Your content will juice more value for what you've invested into. So internally you look better. But from a customer perception perspective, how does this translate into a better customer experience is what will determine the winner. That it can be very effective, that it can be a differentiator, in my mind, is given. But, the real test, which is the acid test, where the customer says, my life has changed and it looks much better than yesterday. I think that is yet to be discovered.
Nitin, I wanted to come to you on the enterprise connectivity business that they're looking to build, right? They want to mirror the scale of their consumer business in enterprise connectivity as well. How are you reading into that, and what kind of potential do you see there?
Yeah, so absolutely. I think artificial intelligence and machine learning and this 5G ecosystem will first, in my view, will touch the enterprise sector much more than on the retail side. So, and with the partnership with all these cloud platform companies like Google and Amazon, Reliance will probably make available the artificial intelligence to the startups and the small and medium-term enterprises in India. And this, I think that the growth is going to be phenomenal and huge, but it's going to be very gradual, and it's a long-term trend in India. And I think in our view, there are three sectors where AI can play a very important role in the Indian context, which are healthcare, agriculture, and education. So these are the three sectors which we believe will see a very early touch point in terms of AI and machine learning.
All right, gentlemen, it's a pleasure having you with us here. Thank you very much for joining us. Nitin and Sanjay, appreciate your time here on CNBC-TV18 as always, and good insights. Well, you got the market, which is up 44 points, but look at the stock of the day. You rarely see stocks reacting this way on the back of acquisition news, right? Look, I'm talking about Gokuldas, 15% higher, 15.5% higher. I mean, the stocks galloped to 700 rupees plus. Now, the company has entered into an agreement to acquire Dubai-based Atraco Group for $55 million. This acquisition will be funded by a mix of debt and internal accruals. Shiva Ganapathy is with us, Vice Chairman and Managing Director at the company. Shiva, good to have you with us here. Good morning. Thanks very much for joining us. Prashant this side, congratulations on what clearly seems to be being taken very well by the market and very complimentary and a meaty acquisition for you. We'll get to how you're funding it, etc. Although, I mean, looking at the reaction, I don't think the market's too bothered with it. They think you'll manage it. So let's talk about the idea behind the acquisition, what it brings to you for Gokuldas, and what was the thought? Because I believe there are some advantages of being able to export out of the manufacturing facilities of this company, which are in UAE, Kenya, etc., where export duties into the US are not there, unlike exporting from manufacturing facilities in India. So just take us through the rationale and what this brings to the table for Gokuldas.
Okay. So the company, while it's headquartered in UAE with all its corporate functions and marketing and every product development, etc., out of UAE, the manufacturing happens out of Kenya and Ethiopia with larger presence in Kenya. There are 4 factories in Kenya, 1 in Ethiopia. Kenya goes duty-free into the US. Ethiopia used to have a duty-free access, but for now it has been temporarily suspended. It's likely that it will be restored. Ethiopia also goes duty-free into Europe. So that way, the acquisition gets us a low-cost location for manufacturing. It gets us a high-quality manufacturing asset because these factories have been around for decades. So they are very, very well-run, very efficiently run operations. And we get a running business, and above all, a duty-free access to key markets. So from all of these standpoints, this becomes a very complementary and value-adding asset for us. And that's one of the reasons why we went ahead and acquired it. It's very well-run. Management is very strong, quite profitable as well. And we see a lot of synergies between us and them, and which is why we went ahead with this transaction.
Well, good morning, Mr. Ganapathy, and congratulations. It's a super transaction. If I look at it on the base of last year, it's adding more than 30% of revenues and more than 35% in terms of profitability. So well done on that front. But let's understand a couple of numbers now. Going through the release, we have the PAT margins. But could you tell us what was the EBITDA margins of this acquired entity? And also, how do you see, what is the peak revenue potential from here on, from the current revenues of close to around $107 million?
So there is, the EBITDA margin is about 10.5% at the moment for the company. And we believe that, after we take control of the company, post all the regulatory approvals, we will have an opportunity to work on improving the EBITDA margin over the next 2 to 3 years. We will also be investing in the plant and machinery, modernization, etc. So all of that will happen as we move forward. In my opinion, this particular asset itself, we should be able to grow by about 25-30% in the next 2 to 3 years. That's the intent with which we are coming. Eventually, all of Gokuldas, we would like to grow at about 20% YOY. And I think this becomes a very important, tool for us to maintain our growth momentum. But this asset itself, as I said, we will have a fairly good upside going forward. In my opinion, at least 25% going forward.
So from $107 million, it can go to what extent with the minimum capex that you have? Can it go scale up
130 odd? So that's about 25%. 130 plus. Yeah.
Okay, so 25 to 30% growth in the next 2 to 3 years for this acquisition, and 10.5% EBITDA margins currently. You have the opportunity to improve EBITDA margins further. Got that. Mr. Ganapathy, good morning. Now, if you can tell us about the balance sheet, what is the kind of debt that you will take on to fund this acquisition? And what is the balance sheet of Atraco itself? I mean, how does, any kind of incremental debt that you take on post it?
So the company only has a working capital debt of about $15 million, Atraco itself.
Okay.
And we will be, funding it by part equity, part debt. The debt that we will take to fund this acquisition would be about $40 million. So I think we have the sufficient cushion, and our leverage ratios are at this point negative, because we are sitting on over 400 crores cash, about almost $50 million at this moment. So even with the debt funding, I think we should be fine. We have the balance sheet strength in Gokuldas to fund this asset ourselves.
So by the end of the year, you will be sitting on $40 million of debt, right?
$40 million of long-term debt, which will be used to fund this asset. Yeah, fund this acquisition.
Okay, and what is the current utilization level of this company?
This would be at about 88%, 89% thereabouts. Yeah.
Okay. All right. Give us a few more details then, sir. Since it's headquartered in Dubai, the effective tax rate will be lower as well. Is that correct? So they get a benefit out there besides getting a low-cost producer with entry into the US markets. The taxation will be another positive.
That's correct.
Okay.
That's correct.
All right. Just going by these rough numbers, I think Gokuldas, prior to this acquisition, the peak capacity would be around 3,500 crores, taking into account the capex as well that you already have, around 3,500 crores?
Yes.
All right. And I put this together as well. So, in the vicinity, I mean, say by 2025, the peak revenue potential for Gokuldas will be in that vicinity of around 4,500 to 5,000 crores?
That you're talking of calendar 25, FY25, FY25 is too short.
FY25, taking into account this acquisition as well, plus the capex that you have, revenue potential goes up tremendously. I'm comparing that with last year's revenue of 2,200 crores. So by 2025, you have a potential revenue doubler. Are we getting that correct?
Well, it all depends on how the market conditions support us. So, that variability we are dealing with. We are seeing fairly good traction in the second half. So yes, a strong revenue growth. Definitely, we are on track for that. This acquisition allows us to get there. Whether it will double in 25 or 26,
peak revenue
I really don't want to comment on that.
Mr. Ganapathy, peak revenue potential. Just want to understand the potential.
Yeah. So potentially, we can go towards 3,500, 4,000 crores. That kind of revenue. That potential exists. It all depends on how things pan out, right?
3,500 crores to 4,000 crores by 525.
No, I mean, you have to be a little more generous with the timelines.
No,
26 perhaps.
But broadly, I mean, without getting into those numbers and all, because it's far out and we don't know exactly.
Exactly, and market conditions. There are too many variables here, right?
Variables. Yeah. But 20-25% is what you'd like to grow the combined business. Is what the aim is.
That's right. 20% combined. Yeah.
The margins, when you said you had the opportunity to improve, you would have kind of assessed what are the improvements you can get to, and where could margins for the acquired asset go up to? What could they go up to? I mean, what's the
So it's a bit early to pin a number because we have to get into the company, get to know all the nuances and details, etc. To be fair to them, they are very well-run company as well. So, but as usual with growth and with operating leverage, I always feel that there is a good scope to increase margins by 1.5% or 2%. That I think should be there. We will discover as we get into the asset soon.
Okay. Just two quick questions, Mr. Ganapathy, if you can help us. One, what is the kind of geographical reach that you will get with this acquisition, and what will that take your contribution to? Because currently, I think 85% of your business comes from North America. And two, any more such acquisitions that you're scouting for, since you have cash on your books?
Okay, so this one will also add more of North America to our geographical reach. This asset exports 95% of its output to USA. So that's because it gets duty-free access to that region. So our weightage to that region will only continue. Probably it will increase up a notch. So that it
and
is what it is.
Since 95% goes to the US, what are the kind of retailers that they cater to? I mean, currently you have Walmart, H&M's, Gaps of the world, but what are the other customers that you would get access to?
They also have similar profile, high profile, good customers that they have. The good news is that it's complementary customers. There's only one customer in common. Otherwise, all the customers that they have are different from the customers that we have. So we probably will also have some degree of cross-selling opportunities going forward.
Okay.
Okay. Any more such acquisitions?
Well, we have to take one at a time. I don't think we will, extend ourselves by doing multiple things simultaneously. So let's deal with this one first, and then figure out the next move.
All right, Mr. Ganapathy, appreciate you joining in and filling us in with all those details. Congratulations on a very, very good acquisition. The street likes it. The stock is locked in upper circuit. I'm only wondering why the seller sold at less than 8 times PE, but good for you, good for your shareholders. And in fact, the stock market has appreciated it as well. For the time being, though, we'll slip into a short break. On the other side, our technical analyst, Mitesh Thakur, will be joining in our special segment, Charting Trends. Stay tuned. Welcome back. Well, time for our special segment, Charting Trends. Mitesh joins us to give us, his insights into a couple of those charts. Well, Mitesh, you go first. Tell us what's the big chart you want to talk about first up?
So, Nigel, today I have identified about 4 or 5 stocks where we can, make observations on the long-term trends. 4 out of the 5 stocks are on the buying side, and 1 is on the exit or the sell side. I'll start with GMDC first. Disclaimer, it's a part of my portfolio, so I have vested interest. But if you look at the long-term charts over here, it's affected a multi-year breakout. So I think it last made a high of around 195 in 2007. And since then, on multiple times, it came to that level of 190, 200, but was not able to get past those levels. Now, in the last week, the stock has moved above this level of 200. And as a result of the breakout, the short-term momentum has seen the stock move to about 260. But given the fact that it's a multi-year breakout, I am expecting a target of around 350 plus over here. So even now, the stock can be accumulated. If there is a mild decline or a profit booking or pullback to the breakout level around 225, 230, I think the stock can be added. And I think now 190 will be a stop loss level. I don't expect the stock to break below that level because multi-year breakout typically we'll see stock make higher highs. So therefore, I think keep a stop below 190. Look for a target of 350. Buy now and add more on a decline to about levels of 230. So that's the first stock on my list. As I mentioned, disclaimer, it's part of my portion.
All right, that's on GMDC. Anything else that you like where, there is a bit of an upside in stock over the next few days, like a positional trade?
Yes. So I have 2-3 more stocks, Sonia. Indiabulls Housing Finance. The stock was clearly buzzing yesterday. I think in the last 2 days, the stock has gained about 15%. But if you look at, again, the long-term charts over here, it was trading at 1,000 a few years back. It's come down, made a very strong base around levels of 100, 120. I mean, in the last 2-3 years, it's tested those levels on multiple occasions and bounced back strongly. And every bounce back has gone to about levels of 250 plus. So I think this time also we are in a similar price movement phase. The stock will hit levels of 250. And this time there is a chance of us getting past those levels as well. So therefore, I'm looking at an extended target of around, levels of 350 also are possible over there. So accumulate the stock at current levels. On mild decline, let's say about 8-9% kind of a decline. Around 175, add more. And 150 should now be your stop loss. Similarly, Sun TV, I think Nimesh has also covered the stock a couple of times. It's again a disclaimer, it's part of my portfolio. That's also given a big breakout above these levels of 540, 560. And given the fact that, the stock has given this breakout, the highest monthly closing of the stock is around 700 rupees. So I'm expecting that as the minimum target and an extended target of around 780. So you have about 25% to about 30% kind of an upside possible over here. And the risk is about 8-9%. So 550 becomes your stop loss as an exit level. So buy here, buy on any mild declines about levels of 580, 570. And you can look at targets of around 700 to begin with, and a good possibility of the stock heading towards 780 plus levels.
Okay, thanks. Go ahead. Your final stock, yeah.
I have one stock on the sell side. Again, I'm putting up a chart of Vedanta Limited. If you look at the stock price movement for the last 2 years, on multiple occasions, we have seen the stock make monthly closing at about levels of 285. And now there's a breakdown in the long-term indicators, suggesting that the stock should go through a profit booking or a declining kind of phase. I'm looking at a target of around 200 to begin with an extension to about 170 possible. So if somebody is holding the stock, it's part of their portfolio. I think there should be an exit even now or any mild pullbacks.
Okay, and what about MMTC?
Oh yes, that's one as well. This is now, the PSU theme is very popular now after PM Modi's speech in the parliament. And this is one stock which was, kind of a wildcard kind of a stock. This was trading in 4 digits few years back. It's come down. And again, for the last 10 years, it's been consolidating around these levels of 35 to 60. I think the movement to 60 has started. So that should be your first target. It still gives you about 40% upside from here. 35 being the stop loss, accumulate the stock, and 60 being the first target. But in any case, the stock starts getting past 60, good chance that we'll see levels of around 85, 90 over here, which means the stock can double in 1 year. And your risk is only about 7 rupees, which is about 15% of the stock price.
Okay, all right, Mitesh, we'll leave it there. Thank you so much for joining us and kind of running us through positional trades, right? I mean, things which one could look at from a slightly medium to longish perspective. And some of Mitesh's calls have done fabulously well. Sun TV, for example, has started to pick up, and he kind of reiterated that once again here in this segment. Well, Gokuldas remains its limit up now, 20% circuit for the day. So stocks at 735, huge volumes. I mean, actually, if I take a look at volumes on Gokuldas exports, they're at least for this point in the day, they're the highest in a long time. 8th of March, you had a very large volume day on Gokuldas exports, but I'm looking at, the full day volumes is against, the first 1.5 odd hours that we have yet right now. 3 million shares on that one. What else is doing well? You've got these rail stocks coming back up. RailTel and Texmaco Rail are two names which... Ircon is another one. So, these are stocks which are buzzing. And there is Finolex Pipe, another one, right? 8% move on very large volumes, 237, 238 on Finolex Pipes right now. PG Electroplast. Oh boy, that's almost 2,000 rupees on PG Electroplast. Stocks up 10%. And, that's a very strong mover and a huge outperformer compared to, I guess, even within that space it operates in. PG Electroplast has done exceptionally well. So that's big volumes on that one. Morrison Laboratories is another one which is up about 5% or so. So, yeah, I mean, it's really lots of new names coming into the mix with lots and lots of action. The Nifty is up a tepid 30 points, but you got to look beyond that.
There's one more pocket. I mean, anything that moves, right? So all the auto stocks, all the auto ancillary stocks doing very well. Bharat Forge, by the way, is at a fresh 52-week high as we speak. There's also Precision Camshafts, which is up almost about 5%. Varroc Engineering is at a fresh 52-week high. JBM Auto is at a fresh 52-week high. This entire space has been doing very well. Eveready is sitting at a fresh 52-week high as well. So this entire space is picking up pace and looking pretty good despite a very, very quiet overall index. Let's slip into a quick break. On the other side, we'll talk about the hospitality space. Sanjay Sethi, the Managing Director and Chief Executive Officer at Chalet Hotels, will be with us to discuss an outlook on their business. Stay tuned. Welcome back to Bazaar Morning Call. Well, Chalet Hotels is on our radar right now. In Q1, the company witnessed a decent performance from the hotel's business and the annuity business, but their occupancy has slipped a tad bit. It's still at 70%, but there's a little bit of a slip compared to what they've seen earlier. In other news, there was a recent exit in the managerial position. Parvez Malda resigned from the position of General Manager, Contract and Purchase. Sanjay Sethi, Managing Director and Chief Executive Officer at Chalet Hotels, joins us now to talk about that. Sanjay, good morning. It is, of course, a great time for the hotel industry, so the growth has been pretty good. But before I ask you about that, any thoughts on the recent exit of Parvez Malda? I understand that exits are a routine course of the business, but anything that shareholders need to worry about, and what is the next, move?
No, Surya, there's nothing to worry about. It's a routine movement, we'll fill up the vacancy soon, but we've got a very strong line to take care of the business. It's business as usual at our end. Okay, business as usual at your end. In the in this quarter gone by, right, occupancy levels have fallen a tad bit. I mean, you used to enjoy 78-80% occupancy levels. That fell to 70%. Is this because of the post-COVID boom and then a little bit of tapering off of demand? And what are you seeing as the way forward in terms of occupancy levels? No, that's not true. In fact, you got to measure quarter one versus quarter one of the previous year. Your sequential quarter is probably not the right measure in Indian hospitality industry, because we have quarterly variances which are pretty much part of the game and par for the course. There is a seasonal and off-season impact that comes into the play. We come back with very strong average room rates and RevPAR numbers, which is a blend of occupancy and rates. And I think the growth over the previous year that we've had.
Yeah, go ahead.
Sorry, I seem to...
go ahead, we can hear you.
You're audible, sir.
Yeah, so for some reason I'd lost you for a bit, but now I'm back. So growth has been very strong for us. And if you look at quarter one 2023 to quarter one 24, we've had some 23% growth, and hospitality itself, in fact, the growth has even been higher than that. And it's driven by room revenue, which has grown significantly higher than the quarter one of the last year. Quarter three and quarter four are always very strong quarters, backed by very strong segment of weddings and MICE. And then the international corporate travel is also very high in the second half of the year. So you're seeing a reflection of that. But on a quarter one basis, we've had the best ever performance. So I think that's something that one must capture.
All right. Hi, Sanjay. Good morning. Quarter three, quarter four normally strong because of the reasons you mentioned, but we have a big World Cup as well coming up. Are you seeing, incremental bookings? I guess there'll be some overlap with the cities that are hosting some of these matches. So tell us about that. And how do you see the average revenue per room move from year on?
So, we've seen 20-odd% RevPAR growth on quarter one compared to quarter one of last year. And I had said earlier in my post-earnings meeting with you that I see strong double-digit growths to happen at least for a few years going forward. And especially rate improvements should be in low to mid double digits. And that should drive the business of the industry and Chalet Hotels going forward. 2, 3, 4 have their own dynamics that come into play because of the nature of the season that we experience in respective cities. But the World Cup, the G20 meets, I'm told there's also a Miss World coming up. So all of that are going to contribute to the business in respective cities. And Chalet will get its fair share of all of that.
Okay. By when will the Westin in Hyderabad and the Duke's property in Khandala start to contribute to your revenues? And any more new launches that you'd have?
So Westin Hyderabad has already started contributing.
Okay.
It got commissioned the first week of June. And therefore, it had the first month in the last quarter. As we'd announced, we've signed a contract with a single client of ours on a full sold-out basis for next 3 years. So that's been a major win for us, and it will reflect on our financials going forward. Dukes is an operating hotel, but we will be shutting it down in parts or full for renovation as we plan to reposition the hotel to a much higher level and also expand capacity by almost 80% of the hotel.
And any new launches that you have lined up apart from these in the next, say, 6 to 12 months?
The 88 new rooms at Pune opening up. We've got the office tower at Bangalore, which is getting occupied as we speak. We've already got 3 floors occupied. We've got our office tower at Mumbai ready for leasing out now. So that'll start kicking in very soon. So these 2 offices, the impact of Hyderabad new hotel, Duke's renovation, expansion at Pune, the Delhi hotel, which we'll start construction activity in the next couple of weeks and will be ready in 2 years' time, is going to be a big ticket item for us. And then we are planning to do a new hotel in Airoli in Navi Mumbai. All these are capacity additions which are going to help us. We're also looking at adding 130 rooms in our Bangalore hotel. So we've got about 1,000 rooms under various stages of design and development as we speak now.
Okay, all right. We will leave it at that, Sanjay. Thanks a lot for joining in. All the best for the quarter to come. Thank you. Thanks for being with us on the channel. That's Chalet Hotels. But let's do one thing. Let us shift focus now to the commodity markets because there's lots happening there. Manisha Gupta is joining in. Manisha, what's the one commodity that you're tracking today?
Well, with all that construction talk, I think copper is on cards right now. We have seen the prices decline quite sharply, though, for the month of August. But it's the future prospect that do look positive. But I'll talk about what's not working for copper right now. So it's down 6% in the month of August. And from the highs of January, where we did see prices at $9,400 a ton, we have declined by nearly 11%. So current trading at around $8,300 to $8,400 a ton is how we're dealing with into the markets. So this is a number that will tell you on why we have seen a decline. Last year, the whole of year, we saw 196,000 tons of a deficit. This year, for the first 6 months, copper in the international markets, it had a surplus of 213,000 tons. That is what is bothering the space. Also, when you look at the global mine production, that is up by nearly 2%. And the refined copper production also has seen a jump up of nearly 7% on an year-on-year basis. Again, the important thing is that China is a major market. So last year, 55% of all global copper demand came in from China. Now, this year, between Jan to July, we have seen that demand decline by 12%. So that tells you that the Chinese demand is not strong also. But there's an opportunity buying that the street thinks you should be looking into copper right now. The prices have seen a bottom in the near term, and you could be looking at some support. As I said, June, July, August are not strong months to begin with. But September, October is when the construction, infra demand and home demand as well starts coming up from China. And that could be supportive for markets. Also about China's stimulus measures that are expecting to support the prices going forward. Copper demand from EV, automobiles and other construction areas is also expected to grow on the higher side. There's an interesting Citi report that came in yesterday which says that they are looking at $15,000 a ton in sense of copper prices by 2025. As I said, we're trading at 8,400 right now. So that's the kind of run-up that the street is anticipating for this metal.
Okay, thanks a lot for that. That is in the commodity space. Let's slip into a quick break. On the other side, our special segment, it's the economy. Lata will connect with Samiran Chakraborty, the Chief India Economist at Citi, to put focus on India's growth picture as the markets await GDP data later this week. Stay tuned.